Let's also then welcome on board the management of Bluestar. They've managed to clock very healthy margins led by cost savings. Unitary products, of course, have seen a very healthy growth as well for them in the third quarter. So let me welcome on board Vir S. Advani, the Vice Chairman and MD at Bluestar Ltd, joining in the show right now. Mr. Advani, hi, good morning. Good to have you on the show. Help us understand how the demand for the company's products was in the quarter gone by, especially when it comes to RAC. Have you gained market share in this period?
Sure. Good morning. Thank you so much for having me on this morning. We had a good quarter. You would have seen that revenue has recovered to about 90% of Q3 last year, and EBITDA was up about 43%. You did mention that it's a combination of margins holding as well as efficiency that we brought in through cost cutting. On the subject of the market, I think the market recovered well. Room air conditioners in particular, you're asking, the market grew about 25% and we grew slightly ahead of that. Our market share now stands at 13%. We also had in segment 2 some addition on account of the vaccination program and supply of refrigeration equipment for the same. So overall, a very strong quarter for our segment 2. Revenue grew about 117% and profitability also grew.
Sure. Your project business has also continued to be under pressure in the third quarter. Are you seeing improvement in execution now? And wanted to understand what the order book is looking like.
Sure. So segment 1, which are both our projects and our central air conditioning business, like you said, the first 3 quarters have been, of course, challenging. Q3 standalone, there was some improvement. We recovered to about 77% level, so nowhere close to the 90% at the company level or the 117% that we saw in room air conditioners and refrigeration. So it's about a 77% recovery. I think the market may have recovered a little better, but we have been fairly cautious about execution and about more focused on cash flow in that business. You would have seen that our balance sheet is looking a lot stronger as a consequence. We brought down net debt levels by another 200 crores this quarter, and it's at about 130 crores right now. Looking ahead, as far as the order book is concerned, it's at an all-time high. We're over about 2,200 crores in order book. It's an excellent order book, just moving a little slow right now. We expect that to improve. Frankly, with the budget that came out a couple of days ago, we are expecting an increase in execution pace after this. So we're quite optimistic that that revenue will start to flow again in this business.
Advani, that sounds fairly encouraging. And what about your margin expansion in the quarter gone by? That's definitely been led by the cost-saving measures. But given the fact that we are seeing the raw material prices increase, how sustainable do you see margins and what is the outlook here?
Yeah, thank you for that. So I think our big concern is, of course, the cost increases. We've seen steel, copper, ABS plastics, and some others go up quite significantly. We have increased prices effective Jan 1. We've raised prices between 5 and 8% across the portfolio. So that will mitigate some of the cost increase. But of course, it's a competitive market and the market has to absorb these price increases. So it's a tightrope that we're walking on right now. We are feeling confident that demand is strong going into the summer. There's pent-up demand. The whole of last year was a washout. So we are expecting strong demand. When you have strong demand, we should be able to pass on some of these cost increases. However, usually what happens is that consumers will move to lower priced products rather than the premium products. And I think you would know that Bluestar has made a big move from premium products down to mass market products in the last 9 months. That's what we've been doing in most of lockdown. Our new portfolio that is available is priced extremely aggressively. And therefore, even with these cost increases, we are confident that we should be able to meet our growth numbers.
Okay. You know, when we last spoke in December, the company had taken a price hike as well, a 4 to 5% price hike in ACs on the back of that increase in RM costs. Will there be a further price hike now, and to what extent?
No, I think we were just letting you know in advance of when we had raised prices. Today, I'm just telling you that it's the same increase between 5 and 8% that we have brought in effective Jan 1. So it is not a further increase. The recent budget will have a small impact on cost. We have seen some minor increases in import duties on some components like compressors and electronics, but that will be insignificant in comparison to the raw material cost increases that we've seen, and therefore the price increases that we have already implemented. I think looking ahead, we should see raw material cost, easing off in the next 3 to 4 months. So, of course, this is a summer that we have to go through at these higher costs, but we're expecting that that should ease off by June or so.
Okay, so some higher costs coming in there. And shortage of certain components, is that also still a challenge along with some of the higher costs that you're seeing? Do you expect that also to ease, let's say, around June? Any update on that front?
Yeah, so we've been fortunate as far as the supply chain is concerned and availability of raw materials. We have not faced the challenges that, say, the automotive industry has been speaking about. The challenges we have is largely around raw material cost, and the rest we have mitigated through some, proper planning. So we did advance some amount of procurement in Q3 itself, which would have normally come into our system only in Jan-Feb. We brought it forward by 2 to 3 months, and that has helped us significantly. So we are not seeing any concern with supply going into the summer, which is obviously an important period for us.